Market analysis. So together we're going to check the market, what's going on. We can understand, we will try to understand the market sentiment, like what's going on. First we're checking the news, the latest updates, and then we will go further and we'll check the charts as well. First of all, as you can see here, the CIVIX chart. This is the market risk and volatility chart. And I think that's, first of all, the first chart that you have to watch as a trader, as an investor. That's the first chart you have to watch if you want to start your day trades, if you want to start your investments, whatever you want to do in the financial market. That's the first chart that you have to watch. Checking this chart can tell you where the market is, what's the risk in the market, what's the you can compare this risk and volatility with the like previous days, previous weeks, and then based on that you can go further and understand the market sentiment, because the sentiment is what's the moving the market at the first stage. As always, what I'm saying, let me repeat that. It's not important what is going on in the market. It is important what the investors and the traders, as a community of the investors and the traders, the bigger community, the big community, or the main community of traders and investors, what they feel. Sometimes we don't have the economic data, just like we don't have a good economic data. We don't have good labor market data. But market feels positive about the numbers. Even though the numbers are fine, the market sometimes can think negative about that. And that's the sentiment of the market. And that's what is the moving the main, that's what's the main market mover. Look at the earnings, for example. Now we are in the earnings season. As you know, we had amazing earnings so far, more than 86%, just like by just like a few days before. Now it's probably more than 86%, 89%, actually. The 89% of the S&P 500 list, they publish their earnings, and the rest they're publishing. They published yesterday, and next day they're going to publish them. They will finish by Monday or Tuesday. What we could learn from these earnings, like we had amazing numbers. For example, let me give you the Meta as an example. Meta Platforms, it has amazing numbers. We had amazing earnings, we had amazing EPS and revenues, but outlook was not good. That's the sentiment. That's what means the sentiment. The market doesn't feel good about that. 10% almost, we had a price falling after that. And we had so many things like that. So again, it's not when you're trading in the financial market or when you're investing in the financial market, the price is not about the economic situation. It is about the economic situation, but at the same time, or most important, it is what the traders, investors, and buyers and sellers in the market are thinking about that economic condition. Even though economic is positive or negative, it's not the first priority. The first priority is that what investors and traders are thinking about that economic condition. So that's why the most important chart in financial market to check is this chart, VIX, Volatility Index chart. So what this volatility index chart tells us for this week so far, it tells us that the market risk, if you go like, let me make it a little bit, watch it as a little bit wider. Okay. This is the like last days of February when the market started to count on, just like started to counting on Iran war. The market was pricing more that the war is going to start. That's why you could see here that the market risk started slowly from down from 15 in January started to rise. And in February 28, when the Iran war started, the market was already at 21. And later, with increasing further this war, the market just jumped up to 27.90. The same thing, and then it was in a higher level for a week or more, and slightly started to fall down in April. For a few weeks, it was up. All March, it was up. Even though in April also we had a war, but still, for the first week of the year when we had a war, still the market was about 24, 23. And then when we got closer to the last days of the war in the Middle East, around the Persian Gulf and the countries there, the market risk slightly eased lower. And now we are in a ceasefire. There's a period that we're in a ceasefire, and market risk this week is around 20, slightly up, slightly down. But now you can see here as today. As you can see here, the market risk is its highest level in almost past 2 weeks. What does it mean? The last time it was February 23 that we had the risk in this level, and now is May 15. So it's like we have 2 weeks here, 1 week there. It's like almost in more than past 3 weeks. It's the highest level in the risk, highest level of the risk in the market. Why that happened? What happened during this week so far? This week, we had the market was focused. The market's focus was on several things. One, at the beginning, Donald Trump visit from China, and Iran war at the second stage, and also U.S. inflation data, and also other, not just the U.S. We had inflation numbers from several economies, but specifically from United States. And those were the numbers that mainly numbers in the news that mainly or they mainly move the market, or we can say they were the main market mover during the week. So what happened? Donald Trump visited China. Let's go to the investing.com. We can see just like checking some news. Donald Trump visited China, and so far we don't have too much news from that visit, because as you know, in China, we don't have too many news. While the officials they're visiting this country, they don't have just like enough press conferences here during their visits, and slightly it's about the news and updates. It's a slightly closed country, so far we don't have that much news on exactly what happened. But what we know that the most or the biggest companies owner or CEOs, they were with the Donald Trump during his visit from the China, which means that that visit was very, I'm saying was because 2 hours ago that visit ended, and now he is on his way with his team going back to the United States. So then you're looking at just like the group that they traveled or they visit with Donald Trump to China. You can understand that was amazing. There's such a just like we cannot call it just like a visiting of the president. We can call it the summit, because it was actually the summit, because the Chinese and Americans, the most powerful economies, the first and the second powerful economies across the board, they visit each other, and the biggest companies owners in CEOs, they came together, they sat together, and they started to talk about the relation, how they can improve their relation. Specifically, when you look, you see that some people like Elon Musk, or you could see the Nvidia's their CEOs. So all these numbers and the peoples there can tell us how that was important. So, but so far we don't have enough news on what happened. That's why we're waiting to see the Americans back to their country, and then we can have some press conference, and then probably Donald Trump will talk about that, what happened in China, what they agreed on, and we will have a more news when they're back to the United States. As mentioned, in China, usually we don't have just like free press conferences, so we don't have too much news on what's coming from them. However, Market was waiting to see what they are talking about the Taiwan, what they're talking about the China, sorry, about talking about the Persian Gulf and Iran war, and what they're talking about the trade war that they have. Three main topics. Sounds like 12 of them. They didn't change much about that, like at least about the Taiwan. We know that the China repeated its view on the China, and Americans answered right away that always the China is telling its idea and view on Taiwan, and we are also repeating our idea and our outlook and view on Taiwan. So sounds like they didn't change. We didn't have a change there, but it's about the Persian Gulf and the Strait of Hormuz and Iran war. Also sounds like same thing happened while the market they were talking about that Donald Trump is going to China. Probably he is going to ask China to help to reopen the Strait of Hormuz. But American officials, they said that we talked about the Strait of Hormuz, we talked about the Iran war, but we didn't ask their help because we don't need their help, and we can do what we want to do. So, but the Trump mentioned about this new sanctions against the Chinese small refineries that are still buying Iranian oil. Actually, they cannot buy right now because now the Strait of Hormuz is closed by Iranian first, and then after that, just like Americans, they closed it for Iranian ships. So sounds like Iranian, they don't have right now this opportunity to sell their oils, but still Americans, they say that if any refineries, even those just like small refineries in some small city in some corner in China, we're gonna still put them in the sanction list. And then if you think that it's like what's the matter for the world and what's the matter for that, because the truth matter is that those small refineries anyhow they have to do some banking works, and if they are in the sanctions, then the banks they give them a service or they serve them, those banks also will be polished. That's why the banks cannot give them enough services that they need. That's why that can block. I mean, the step by step when you're coming, that can block everything. So even those refineries or the small refineries in some corner of the China that can be affected by these sanctions. Anyhow, that was about that, and now the market about the inflation. About the inflation numbers, which was one of the most important numbers, we will talk about that when we are just like going to review the economic calendar. Let's do that now. Let's do that now. Okay, let's start reviewing the economic calendar, the numbers that so far we had from the very beginning of this week. This week started with inflation. I mean, as mentioned, that was about the inflation week. And so everything in this week have been moved by inflation numbers. In China, consumer price index CPI increased by 0.3% monthly base in April, and annually it increased by 2.8%. But sorry, annually it increased by 1.2%. That was, for the Chinese economy, it was one of the highest level of inflation that we had so far in more than 2 years, in more than a year actually. And that can be the effect of the higher energy prices. For China, for this period, for the short period, that can be a good number actually, because the Chinese economy has been suffering from the lower inflation so far. So this number is not such a bad number for the Chinese economy, which we can say, okay, that can be fine for the China if it doesn't continue so far, because at the same time, the Chinese economic growth is not that great. So if we have the inflation higher, that can, and if the inflation stays higher for a longer, that can end with the stagflation in China because there is no enough economic growth there. Later, the most important numbers on Monday that we had about the U.S. housing market. Existing home sales slightly increased in April compared with the March. What we can sell that, okay, sounds like accepted numbers and telling us that, okay, the U.S. housing market is still Even if it's not the resilience, it's fine. That's the difference between the resilience and the fine. So Tuesday started with the Japanese householding, house spending and householding numbers. That householding spending. What that matter? Oh, by the way, about the Chinese inflation, I have to mention that the Chinese Producer Price Index (PPI) increased by 2.8% annually. That was also another surprising number because when you have this producer number in this level, and we'll talk about the U.S. producer number as well, Producer Price Index actually. When you have PPI in this number in this level, it means that the prices are moving so fast higher for the producers, and producers, if they have such a big gap for compared with the previous months, it means that especially if they believe that that can continue for another 1 or 2 months, it means that they cannot hold the prices, the final prices for the consumers unchanged. It means that they're going to sorry, they're going to pass these higher prices to the consumer. So if you have the producer price index slightly up compared to previous month, you can say, okay, maybe they can somehow, the producers, they can somehow lower their profits and not pass these higher prices to the customers. But when you have such a big numbers, it means that, okay, that's the time that the producer, they can pass these numbers and pass these prices to the consumer. So producer price index is very important to look at from this uh, point of view. On Tuesday, as I was talking about, that for the Japanese economy, the household spending is very important. One of the main and the most, we can say, issues that the Chinese have had first, and then we saw that in the Japanese economy that we have, and right now we can see that in European economies as well, is the spending. How the consumers, people, they are spending their money. In China, it's not a negative, but it's very low. In Europe, it's somehow almost as a negative, especially in countries like Germany. But in Japan, it was a negative for a long time, and the Japanese, they are not ready to go out and spend their money, especially in the past 2, 3 weeks when the war, past 2, 3 months when the war started and these concerns are high and energy prices again high. The Chinese consumer, Japanese consumer, they have a higher concerns and they have a bigger concerns about economic growth and economic outlook. That's why they are not ready to go out and spend their money. So household spending, you can see here in March, fell by 2.9%. That's not a small number annually, and 1.2% drop on a monthly basis. These numbers are not a small numbers. And those are numbers are the numbers that you can tell us that we should be really worried about the fate of economy in Japan. You know, that should be very concerned, and especially when you know that the Japanese 10 years bond yields, if you look at here, Japanese 10 years bond yields increased rapidly on Tuesday from 2.35 to 2.54%, which is higher right now, about 58% right now. But at the same time, we had some positive numbers from Japan also. Leading index slightly increased from 113 to 114, but still, as mentioned, the leading index economic data from Japan, they are not such bad numbers. Again, we are coming to my first sentence that or the first subject that I was talking about. Everything is about the feeling of the consumers. Even though the Japanese economic numbers are not bad, I mean, are not weak actually, when you're looking at the Japanese economy, you can see, wow, the numbers are fine, even if they are not the resilience. But when you're looking at the consumer, they are not spending the money. So it's not important how Japanese economic condition is. At least you can say that the Japanese economic condition right now is way better than the European economies, but still, Japanese are spending much less money than Europeans because they are feeling worse. While in fact, the European economy is much worse than the Japanese. So again, it's not about how the economic situation is. It's about how consumer and how investors, how traders community are feeling and thinking about the economy. So the sentiment is most important. So these numbers means that when you're spending less money, it means that okay, you're spending less money, and this retail sales will be less. And when the retail sales will be less, you will have just like weaker GDP and all these. I mean, you're all coming together one after another. So that's why the household spending is the same as the retail sales. All one of the most important numbers for the economy when you're looking at the numbers as a trader or investor, and if you want to understand the market and what's going on in the market. Anyhow, inflation in Germany we had on Tuesday, which increased by 0.6% monthly base, slightly lower than March 1.1%, but annually it increased again to 2.9% from previous 2.7%. Why? When we are talking about the 2.9% inflation for the German, don't forget that it was about the 1.7% right before the war starts. And now we can see the European economies generally, just like in a bigger picture, uh, is one of the biggest affected economies after Iran war. It's the same situation that happened after Russian and Ukrainian war as well, because the Russian energy, European energy, was so much depending on it was so much depending on the Russian supplies. And after the Ukraine war, we had a supply problem, we had sanctions issues. So Europeans have been suffering especially for the gas. And now again, when the war started, now when they reduced their the buy and the supply chain from just like change it from Russia to Americans and the Middle East, and again now in the Middle East we have this conflict, and more than 20% of oil and gas in the market have been cut in the last almost 2 months. So more than 2 months actually. So what does it mean again? That now the energy price is high, and when the energy price is high, Europeans are depending too much on the energies coming from others, just like part of the words, and not they're not that even that close to the United States as the Japanese are, and they are buying the oil from the Americans, but the Europeans are not that close, so they're going to be a little bit more affected their economy, and that's what we can see here. That's why you can see the inflation increasing by 2.9% annually. Even though if you go to the Switzerland, you can see the PPI increased by 0.8% monthly. Even that in that small country, which doesn't have too much factories that they are depending. I mean, when you're looking at the German's industry and you're looking at the Switzerland industry, you can see that the Germans industry, they need energy much more than what they need in Switzerland. But still, you can see the inflation in Switzerland increased by 0.8% in April, which is which means that we should be more worried about the Europeans' economies. Later on Tuesday, we had inflation number again from India, and we saw the inflation in India also increased by almost 5%, slightly higher than in April, slightly higher than 3.4% that we had in March. And same situation and the same trend almost we had in Brazil. The inflation increased from 4.14 to 4.40, almost the same level that we had in the previous month. In monthly base, inflation increased by almost 0.7%. Showing us that the Brazil's inflation also should be watched much closely. Anyhow, the Tuesday's market focus was the U.S. inflation numbers, and we got a surprise there. We got a big surprise in the United States. We saw that inflation on a monthly base increased by 0.6%, in line with expectations and slightly lower than 0.9% that we had in March. But looking at the annual scale, the U.S. inflation jumped to 3.8%. The 3.8% for the United States of America, that's not that's a very huge number. And the main inflation driver is oil price, and that there is no doubt about that. The inflation for the oil is more than 24%, and that's why you can see the core inflation at 2.8%, not like a headline inflation at 3.8%. The core inflation means that excluding the energy and food prices. Anyhow, still the higher energy prices affecting the supply chain for the non-energy related products as well, because that can increase the transportation, that can increase the risk of the market risk and the risk premium, that can increase so many other stuffs there around. That's why you can see there, you can see that core inflation in the United States increased by 2.8%, while the headline inflation is increasing by 3.8%. So generally, looking at the numbers, you can tell that the U.S. headline and the core inflation is again high, and telling us and showing us that we should be really worried about the U.S. inflation situation and the condition. And now the market, how that affect the market? Look at especially, let me talk about the Wednesday numbers, and then I will show you the FedWatch tools and will tell you how those numbers can affect these FedWatch tools. But interesting number, at the same day, we have the Red Book. Red Book, it says the Red Book is the index. I mean, the Red Book is not that same Red Book that we had just like years ago, slightly changed. But anyhow, the Red Book written says is it's the measures that covering and telling us that the U.S. retail sales between the big markets, bigger supermarkets during the past week, but the scale is annual. I mean, they watched the past week, but they compared the year ago, so that's why it's an annual concern. It's an annual measure, but it will give us this like in a weekly period. Previous week, it increased by 9.6%. Week before that, it was 7.8%. Week before that, it was 7.6%. Now, looking at these numbers, well, as mentioned earlier, we had Japanese household spending. When we talk about the weaker European spending as well. But when you're looking at those countries, and the Europeans, Japanese, German, Japanese, and Chinese, when you're looking at those economies, you can see that the consumers are spending less, and now you can see the Americans spending such a huge numbers. The returns is more than 4%, and the Red Book is 9.6%. That tells us that the U.S. economy should not have a big problem because compared with other economies, because the consumers are still ready to spend their money, so ready to spend the money, so going out, spending money, and that can support the economy, that can support the GDP. Anyhow, that was what we had in the Red Book. During this week, we had EIA short-term energy market outlook and on Tuesday, and then Wednesday we had IEA monthly oil market report monthly, and then we had OPEC monthly report as well. And these all three reports that we had so far, they were telling us that while the markets are expecting weaker, less supply, and when they're just like you're talking about the less production. At the same time, the market again talking about the less demand as well. When the market is lowering its like supply, at the same time the market this report showing that this war not just affected the supply, it's affected the demand as well. So that's why we can see there is somehow some balance between the demand and supply. And even though the market was talking about $150, $200 oil price, if this war starts, if the Strait of Hormuz, just like we're talking about the Strait of Hormuz, which is like 20% of the gas and energy, just like the oil and generally the energy price is passing. I mean, that channel is just like one of the most important ways, just like the channels across the world. And now we are talking about the 2 months of the channels have been closed. And still, the energy market, looking at the gas prices at around $2.80. When you're looking at the energy, like oil prices around $101, $102 for WTI, and Brent oil is around $105, which is really surprising numbers. If we before the war, if you were asking any financial market analyst or any economist, they were telling you that, wow, if they close the Strait of Hormuz, the prices will be jumped to just like $150 or $200. But it didn't. They have many reasons for that, but one of those reasons is this balance between, just like the balance that we have so far between the supply and demand. So while we have lower supply in the market. At the same time, we have slightly less demand as well. I think it's around 2 million barrels less demand in the market, while we are losing around 50, just like losing around 15 million barrels, just like so. They just somehow covering each other, because at the same time we had a higher supply from the Venezuela, the United States, Russia, and other economies. Anyhow, that was the most important point that we could see in IEA, EIA, and OPEC monthly report about the energy and oil. So in the Eurozone, at the same day, we had on Wednesday, we had Eurozone GDP numbers as well, and we saw that Eurozone economic data, sorry, generally, not the GDP only. We had the GDP, industrial production, labor market data. European GDP in the first quarter increased by 0.1% quarterly. Annually, in the first quarter, increased by 0.8%, still less than 1% growth. That shows that the European economy still is under pressure, and we should just like think twice before making any investment in Europe. Employment also was weak in the first quarter, falling while the industrial production annually in March also fell by more than 2.1%. Those numbers, the annual and on the monthly basis, it increased only 0.2%. Those numbers are telling us that the European labor market is weak. GDP is very low. I mean, it's not negative, but it's just like very weak, really. So industrial production, same. That's what I'm talking about. That's what I'm saying, that about any investment or trading investment or business with the Europeans, we should think twice before putting any money there. Anyhow, later on Wednesday, the most important numbers in U.S. economy, it was producer price index. U.S. PPI jumped by 1.4% only monthly base in April, and annually in April, headline producer price index or producer inflation jumped by more than 6%. We were talking about a 2.4% PPI in China. Now look at the 6% in United States, while it was 4.3% in March as well. So you had a 4.3% in March, and now you have 6% in April. What does it mean? It means that the producers that they were making this products with us like $100 2 months ago, last month it jumped to $104, more than $104, and now again $6 off. Now the production, which was costing for the producer just like $100 2 months ago, now it costs around $110. So what does it mean? It means that the producer, they cannot somehow cut. I mean, how much they want to cut from their profits? How much, whatever they want to cut from their profit, they cannot cut all their profits and work for free. That's why they have no more choice to pass these prices to the consumer. So that's why we are expecting to see the consumer price index also to get higher in the next months. So if PPI is 1.4% monthly, 6% annually, and even the core PPI increased by 1% monthly and 5.2% annually. Putting these numbers together, I'm telling us that even without just like without counting, or just like, or if you exclude the energy and oil prices, still the prices for the production increased by more than 5.2%. What these numbers telling us, and that core inflation was 4% previous months, just like again almost more than 9%, almost 10% growth in just like past 2 months. Again, these numbers are telling us that we should be much more care and worry about the U.S. inflation facts. That's why when you're going further and checking the charts like the FedWatch tools, you know, the FedWatch tools is the chart that is telling you, showing us that what we can expect from the next Federal Reserve meeting. For June, 99.6% chance for holding the current rate. Before the war, we were talking about the rate cut in June, and now we are not. Now we are just not. It's not just we are not talking about the rate cut. There is even the chance of the rate hike, even in June. I'm looking at the July meeting. The chance of a rate hike, not the rate cut, the chance of a rate hike increased to more than 4%. Looking at September, this chance for the rate cut is still just like zero, less than zero. I mean, there is no chance for the rate cut. Holding the current rate more than 80%. Rate hike by 25 basis points. Now that's surprising. For September, 25 basis point rate hike has more than 17% chance, while there is still the chance for 50 basis point rate hike. That's the joke. I mean, if you compare it with like 2 months ago, that can tell you what the hell is going on in the market. Again, looking at the October, look at that. Holding the current rate, 67% chance. Look, there is, yeah, it is 0.1% chance, but there is a chance. There is a chance of 75 basis point rate hike. While the 50 basis point rate hike chance is increased to 3.6%, and now we have almost 29% chance for 25 basis point rate hike. And going further for December, look at the December. More than 1% chance for 50 basis point rate hike. More than 10% chance for, more than 1% chance for 75 basis point rate hike. More than 10% chance for 50 basis point rate hike. And more than almost 39% chance for just like more than for 25 basis point rate hike. What those numbers telling us, and still there is no chance at all for a rate cut. What these numbers telling us? Let me tell you what these numbers tells us. To understand the situation in the market, you have to go to the bond market and check US 10 years bond yields. Look at this number. US 10 years bond yields and 2 years doesn't matter. You can check any of them because we are checking the trends. We have the yields at 4.55%, almost the 4.56%. And we had the highest just like 4.57%, just like, sorry, the highest is like 4.56% almost. Not just 50, just like 45%, 4.45% or 4.55%. We have 4.56%. That's what these numbers telling us. These numbers tells us that when the yield is higher, the money that producers and business owners they're receiving to invest in their business is expensive. When you have expensive money, you invest in your business, it means that you are accepting the higher risk. So when in this situation, if something happens for your business, if you lose your business or whatever things like that happens, it means that you are in a much bigger, just like risk in the market. And if for any reason, the downtrend starts in the market, that downtrend can be sharper. Let's go further and check out our economic data on Thursday. We had yesterday, which was yesterday, the most important numbers yesterday. It was about UK economic data. UK GDP was surprised me actually, to be honest. I was not expecting to see this positive numbers in the UK economy, just like we had. Like look at the March, like 0.3% monthly and 1.5%. This was 1.2% and 1.2% annual GDP growth. This is well, just like for the first quarter, British economy increased by 0.6% quarterly and 1.1% annual in the first quarter. That was a positive number. Even though industrial production on a monthly base fell by 0.2% annually, it was positive, and industrial production was actually no, but not positive, but it was not a negative as well. It's like it was flat, while manufacturing production on a monthly and annually basis increased by 1.2%. Generally, the UK number was positive, but still, I mean, it was positive, but it was not a good. That's a big difference. Yeah, but it was better than expected, but at the same time, we can say that the UK economy is just like compared with its own situation, is still weak. It's not good. And yesterday, we had inflation numbers from Spain, Italy, and other economies as well. The same as other economies, the inflation there also increased. But the most important numbers of the day before, or on a Thursday, we had the retail sales numbers and also the labor market data. Initial claims to is resilience, is good. So, but the retail sales, look at the retail sales. The US retail sales increased by 0.5% monthly base. That's telling us the US economy is still fine, while the other economies is negative. On a monthly basis, it's increased by 0.5%. The core retail sales, excluding the energy and oil prices, increased. I'm telling oil prices because this is a nominate number and the counting by on the prices, even excluding, including inflation numbers. Anyhow, core retail sales increased by 0.7%. Annually, US retail sales jumped by almost 4.9%. Just compare it with the falling 2.8% for the Japanese. And that's 4.9% increase in the US economy. And that's why you can see the trust in the US bond yields is much higher than other economies. And today, Japanese producer price index, you can see here the PPI increased by almost 5%, by 4.9%, while on the monthly base it's increased by 2.3%. That tells much to us. It tells us that we should really be careful and worry about the inflation. Anyhow, that was what's happened in the market, and let's check the let's check the charts. As you can see here, while in DXY VIX is still increasing, this higher market risk increasing the demand for the US dollar index, and that's why you can see the dollar index is up by 98.97, almost 99. We had a 99 a few hours ago. Anyhow, just like looking at the chart, you can see that US dollar index gaining for its safe haven demand and it's still up, but that's the effect of this higher bond yields that we had. We're talking about the bond yields that is increasing. That's the effect of that. But looking at the stock market, let's talk about SP 500, S&P 500, or US 500. Oops. Oh, okay, let's do that. US 500. There we go. Looking at the S&P 500, you can see, let me bring this daily chart. While we had the records, look, we had the records every day. We had the new all-time high records. Yeah, during this week, just like every day, during this week, every day we had a new, just, I think, only on Friday, Thursday, only on Tuesday, we didn't have all-time high, but all other days we had a new all-time records. And today the market is down. Just the main reason of lowering this market is the higher risk in the market. And now the market, during the past 2 weeks, especially while we had no war, the war was just like Donald Trump was talking about, the positive progress in the condition in ceasefire. And while the market at the same time, while we had that, at the same time, we had a positive earnings reports as well. And those earnings were also supporting the market. So that's why we had a positive movement in the market, in stock markets, including the S&P 500, including NASDAQ or Dow Jones, all of them, they were printing new all-time high every day. And now with the higher risk in the market, we talk about that, and now the money is so expensive right now. With the bond deals around 4.56% for 10 years bond deals, that's amazing. No, that's surprising number actually. Before war, it was like less than 4%, 3.8%, 3.85%, and now it's 4.56%. So what does it mean? It means that, as mentioned earlier, I'm telling you again that what does it mean? It means that the money is more expensive right now. And when you have expensive money and you have the higher prices and you invest it more expensive, you are in a higher risk, you are in the edge. And when something happened to your business, you can go further and see the sharper effect of that prices. That's why the market's concerns is so high. And in this situation, if this downtrend continues for more than 2 days. Look, it's very rarely we had just like more than 2 days downward, and now we have more than 2 days down. If we have more than 2 or 3 days downward, especially if we have this downward, this like rich candle, more than 2 days. If it goes for 3 days, and then it's the time that can just like can market got very big damage as the market risk is getting higher, the concern is getting higher, and now the panic of the investors of selling the prices because the prices are so high. Just imagine if if just like a higher number of the market participants and the investors and the traders, they go towards saving their profits. What can happen? That can start a very big domino of lower prices. The same situation we have for not just for the Nasdaq and S&P 500. The same situation we have for Dow 30 as well. This is the same situation. The same movements we have here. And it's about the same situation for the Chinese FTSE 50 or FTSE FTSE 100 or FTSE in United Kingdom. FTS here we go. FTS 100. That's the the same thing here. Let me yeah, it's with the GBP. The same thing with the FTSE. It's in the GBP. The price is in GBP, it's not in US dollar. The same situation we have in the FTSE. You can see the FTSE, which was increasing in recent days, and now it's in a downtrend. The same situation we have in EU 50 or EU 600. It doesn't matter. All of them, they're almost the same. They have almost the same situation. Generally, it's not that. EU 600 is like. Anyhow, just like looking at the Euro 600 Euro. Okay, like that. Anyway, just or looking at the Nikkei. Oh, I wanted to talk about the Kospi Nikkei 225. The same situation you can see here in Japan in the Nikkei 225. But the most importantly, I wanted to talk about the Kospi. That's good to remember. Kospi index in the South Korea doesn't have it. Let's see which brokers that supported Kospi. I don't have it. Look, that's important. Okay, Kospi chart. The Kospi is was one of the biggest, just like looking it's just like what. Let's talk about it just like 1 year ago. Just look at the Kospi's movement in 1 year ago. This movement is one of the biggest movement that we had so far. Still looking at just like in the past even 1 month. Look at this movement. That's 1 month. It's not about just like it's not about the several months. This jump is from 6,000 to more than 8,000 in a month. The main reason of the Kospi's movement was the like AI based and tech based companies. So that was what happened here. but still now there are so many jobs. If we go towards, as mentioned, if we go to just like if we go we go back again to US 500, I want to show you something here. US 500. If we go to this situation and condition, and we see more than three candles, red candles in a daily chart, that can bring the concerns to the market, that can bring the too many doubts to the market, and that's the situation that we should be worried about that, because then many market participants and the traders, they can start saving the profits and can be somehow can be really dangerous situation, we can say, or risky situation in the market. And the cryptocurrency market, checking at the BTC, looking at the Bitcoin, let's talk about the Bitcoin also. As you can see here, the Bitcoin was good to remember about that also. Bitcoin, when we talk about the Bitcoin, we should talk about the Kevin Warsh as well. The Bitcoin and the Kevin Warsh, they're so related together. Let me start with this. The Kevin Warsh finally this week, he confirmed by the Senate to be the Fed governor, and now he's going to be the Fed governor. But still, Mr. Powell will lead the Federal Reserve as a Fed watch. As a Fed chair, but it can be maximum till January 2027. Coming to just like Warsh coming, it means that he's slightly more hawkish person, while he is slightly more hawkish about cryptocurrencies as well, because he is really just like he likes to have more stricter laws about the cryptocurrencies. And about the cryptocurrencies, he thinks that we should have more regulations, and the regulation should be more sticky. That's why now we have this regulation new regulation and the laws in the Senate, even though we had some policy progress there, which supported the cryptocurrency prices, and now the crypto exchangers and the wallets, they can pay you the profits legally, but the numbers is limited. Still, the banks they were so against that, and they found that the law, the act is not confirmed yet. They're just like both parties they're talking about that, and probably we'll see that if that act and that law can pass the Senate, that can be very good and a positive news for the cryptocurrency market. However, the market is somehow earlier priced on that, and now they're contingent to passing this law. Anyhow, but the cryptocurrency market in the past 2 months during this war confirmed that this is a risky asset. So when the market risk is higher, you can see lower prices. That's why you can see today the price is lowering, because of the market risk is high. Again, kind of just like during this weekend, it is possible to see again the concerns in the middle, just like the war starts or anything starts in the Persian Gulf between the United States and Islamic Republic based in Iran. Yeah, that was what happened in the market past week and what is going on right now in the market. If you have any question, I will be more than happy to get your question. If you have any question, you can write in the just like chats, or you can raise your hand. I can let you to ask a question. No question here. Okay. Thanks for attending, and hope it was useful for you. Again, talk to you soon. Next Monday, I should mention about the next Monday webinar. I will not be available on the Monday webinar because I'm traveling. And next Friday, we'll be with you with the next markets live analysis. Don't forget to register for the Friday. If there is anyone registered for the Monday webinar, I have to apologize earlier that I couldn't change my flight ticket. So on Monday I will be in aircraft, and on the sky at the time of the webinar, so I cannot be here with you to have this webinar. Okay, thank you so much for attending. Have a good weekend. Talk to you soon. Bye-bye.